A staggering $1 billion poured into Ethereum ETFs on Monday, marking a historic shift in institutional investment preferences. This unprecedented event could reshape the future of cryptocurrency. Here's everything you need to know about this monumental development. As we look ahead, the momentum generated by the recent $1 billion investment into Ethereum ETFs is likely to continue. This substantial influx of capital marks a pivotal moment for Ethereum, which has long been viewed as a second-tier asset compared to Bitcoin. The enthusiasm surrounding Ethereum ETFs could set a new precedent for institutional interest in digital assets. In the coming weeks, we might see Ethereum ETFs experiencing sustained inflows, potentially propelling ETH prices toward the $3,500 to $4,000 range if this momentum holds. This price surge would not only benefit investors, but also signal a growing acceptance of Ethereum as a legitimate investment vehicle. Altcoins associated with Ethereum, particularly those in the DeFi and Layer 2 sectors, are expected to outperform as institutional capital seeks yield and utility. These projects have gained traction due to their innovative solutions to scalability and transaction efficiency, making them attractive to investors looking for diversification. Additionally, ongoing regulatory debates in Congress may lead to clearer rules for Ethereum-based products, which would further bolster institutional confidence. Regulatory clarity could also mitigate risks associated with investing in cryptocurrencies, making them more appealing to conservative institutional investors. Meanwhile, Bitcoin could experience volatility, but may face relative underperformance if institutions maintain their focus on Ethereum's ecosystem. As capital flows toward Ethereum and its associated projects, the cryptocurrency market dynamics may shift significantly. The increasing prominence of Ethereum could challenge Bitcoin's dominance, altering investor strategies and market perceptions. As the landscape evolves, one question remains: how will this shift in institutional capital influence the broader cryptocurrency market dynamics? Analysts suggest that if the trend continues, we may witness a reallocation of resources within the crypto space, favoring Ethereum-centric investments in the months ahead. This monumental shift towards Ethereum has been building for months, with a confluence of factors driving institutional interest. It follows a series of technical upgrades to Ethereum, such as the post-merge efficiency improvements and the recent Dencun upgrade, which has significantly reduced Layer 2 transaction costs. These enhancements have made Ethereum more attractive for developers and businesses seeking scalable solutions. Concurrently, the U.S. House of Representatives initiated Crypto Week, debating 3 key crypto bills, including the Clarity Act, which aims to establish clear regulatory frameworks for cryptocurrencies. This legislative effort signals a growing recognition of the need for regulatory clarity in the rapidly evolving digital asset landscape. The growing institutional adoption of Ethereum-based products has been fueled by these developments, boosting confidence in Ethereum's compliance and scalability. Institutions, once primarily focused on Bitcoin's status as a digital gold, are now increasingly recognizing Ethereum's yield-generating potential, which offers opportunities for income generation through decentralized finance (DeFi) platforms. This shift contrasts sharply with Bitcoin's traditional narrative as a store of value, highlighting a broader acceptance of diverse investment strategies within the crypto ecosystem. The historical context illustrates how regulatory changes and technological advancements have converged to elevate Ethereum's status in the eyes of institutional investors. As more companies and funds explore Ethereum's capabilities, the implications for the broader financial landscape are profound. The emphasis on compliance and innovation may pave the way for more mainstream adoption of blockchain technology. Looking ahead, the ongoing developments in regulatory frameworks and Ethereum's technological evolution suggest that institutional interest will likely continue to grow. As Ethereum solidifies its position as a leading platform for decentralized applications, it could redefine investment paradigms and reshape the future of finance. This unprecedented influx into Ethereum ETFs signifies a strategic pivot for institutional investors. Recently, data revealed that institutional investments in Ethereum exchange-traded funds have outpaced those in Bitcoin for the first time. This shift highlights a growing recognition among investors of Ethereum's long-term value, particularly in its robust smart contract ecosystem. Ethereum's unique capabilities enable decentralized finance, DeFi, applications, and tokenization, which are becoming increasingly vital in the evolving financial landscape. Historically, Bitcoin has been viewed as the primary cryptocurrency, often dubbed digital gold. However, Ethereum's versatility is attracting attention as it supports a diverse range of applications, from decentralized applications to non-fungible tokens, NFTs. The recent downturns in the NFT sector have not undermined Ethereum's significance. Rather, they have prompted investors to reassess their portfolios. With regulatory clarity on the horizon, institutions are likely to rebalance their investments, seeking greater exposure to Ethereum. The implications of this shift are profound. As institutional capital flows into Ethereum, it could validate Ethereum's role as the backbone of decentralized finance and NFTs, further solidifying its place in the cryptocurrency ecosystem. This influx of capital may also trigger a broader altcoin rally, as other cryptocurrencies linked to Ethereum's ecosystem gain traction. Investors are increasingly looking for yield and utility, and Ethereum's functionality provides both, making it an attractive option in a volatile market. For the average person, this development is significant as it influences market sentiment and investment strategies. Increased institutional interest in Ethereum could lead to greater accessibility and maturity within the cryptocurrency sector. As more individuals become aware of Ethereum's potential, we may see a shift in public perception, driving broader adoption of cryptocurrencies and blockchain technology. Looking ahead, the increasing institutional focus on Ethereum suggests that we may witness further innovations within its ecosystem. As regulatory frameworks evolve, Ethereum could become a cornerstone of the digital economy, paving the way for new financial products and services. This evolution holds the promise of transforming not just the cryptocurrency landscape, but also the broader financial system, encouraging more individuals to engage with these emerging technologies. On July 6, 2026, a record-breaking investment of over $1 billion flowed into Ethereum exchange-traded funds, ETFs, surpassing all previous single-day records for cryptocurrency investment vehicles. This unprecedented surge in investment coincided with Ethereum's price climbing above the $3,000 mark, signaling robust investor confidence. Bitcoin also experienced notable volatility, briefly touching $122,800, a price that reflects ongoing interest in the leading cryptocurrency. Furthermore, altcoins such as Solana and Dogecoin observed significant percentage increases of 9% and 8%, respectively, indicating broader market enthusiasm. The influx of capital into Ethereum ETFs is particularly striking, as it marks a significant shift in institutional investment strategies. Historically, Bitcoin has dominated institutional interest, often overshadowing other cryptocurrencies. However, this record investment in Ethereum suggests a growing recognition of its potential, driven by factors such as the rise of decentralized finance, DeFi, and non-fungible tokens, NFTs, which are largely built on the Ethereum blockchain. The previous record for a single-day investment in a crypto ETF was significantly lower, making this event not only surprising, but potentially a watershed moment for the cryptocurrency landscape. The concentration and size of the Ethereum inflows highlight a growing preference among institutional investors for Ethereum over Bitcoin. This shift could reshape the dynamics of the cryptocurrency market as institutions increasingly diversify their portfolios to include a broader range of digital assets. Analysts suggest that this trend may reflect a more mature understanding of the blockchain ecosystem, where Ethereum's smart contract capabilities offer unique advantages that Bitcoin does not. The implications of this shift extend beyond mere price movements. They could influence regulatory discussions, market strategies, and innovation within the space. As institutional investors reassess their positions, the demand for Ethereum may lead to increased scrutiny from regulators aiming to establish clearer guidelines for digital assets. Looking ahead, this significant investment surge may pave the way for even more institutional engagement in Ethereum and other altcoins. As more investors seek to capitalize on the evolving landscape of digital assets, we could witness a further decoupling of Ethereum and Bitcoin in terms of market behavior. The future of cryptocurrency investment may well be characterized by Ethereum emerging as a frontrunner in institutional adoption and innovation, potentially redefining the market in the years to come. As Ethereum emerges as a primary target for institutional investment, how will this shift impact the future of the cryptocurrency market? Share your predictions in the comments and subscribe for daily deep dives.